Okay, this is end of day trading using two different methodologies: statistics and volume. So, first time I've combined this into two programs into one. Actually, both programs are running. Statistics, you can tell, statistics is on the top bar. The volume part is this next thing, and then statistics is also down here where you got the numbers. Above the candle is like here a 3 and a 1 down here. So this says it's going to go up. So end of day trading is different than day trading. End of day trading is at the end of the day, which is this dash line here. You put your order in here. So if you're going to do a long, you'd put your order into, you would buy some shares at this price, and then sometime before the next day, in the evening when you get home from work or whatever, you could put it in the exit order where you would say, if it gets up to a certain limit price, buy. I'm sorry, an exit, which would be a sell. So you buy low on one day, sell high the next day. And in case your prediction's wrong, you'd have to have an exit or stop loss order down here. So a double order would be called an OCO. One order cancels the other. If it goes down below a certain point, it will sell it for a loss, a stop loss. If it goes up above your limit, your sell limit, it would do a exit and sell. Okay. So, and down here you also have, I put blue triangles. The blue triangles are high volume, and then I have little clues here, ups question marks. So you can sometimes see that these are helpful, but I wouldn't rely on them. And I have little bars here with what profit you would make if you were to sell after, with the highest value in the first hour. So if you want to use statistics and if they're reliable for a certain stock, there's two columns here, two tables here, and what I want you to know is that there's the first bar, the largest bar, and any either first bar or hour bar. And so I want to do the first bar of the day because that's end of day trading. So the numbers down here for this program today that I'm talking about is using the first bar of the day. And so if you look up here in the table and you see first bar of the day, there's numbers here like 405 out of possible 3, and then this number 4. You know that my program is working for this particular stock, GTT. If in the case of a long, in other words, if it goes up statistics. For shorting, if the price goes down, there's also good statistics. So these statistics don't work for every stock. So the idea is to scan for lots of stocks and look through them to find the stocks that it works for, and then use those. That way you can use the statistics. The statistics are like all like 0, 5, and 0 here. Like, don't even count on these numbers being accurate down here. All right. The way the statistics used to work is it automatically would look at not the last bar of the day, but the second last bar of the day. And the reason I did that was because the last bar of the day is when you want to make the trade. And so while you're doing it the last bar of the day, it might start out low volume and then it comes to high volume, or it start out with green and then turn red. So you really can't rely on the last bar of the day. You have to make your decision on second last bar of the day. So in this case it says 4 and 0, so it thinks it's going to go up. Then this one here says 2 and 1, so it thinks it's going to go up. This one says 1 and 3, it thinks it's going to go down. Got it? So it's I used to, and that's how it works. Now I'm combining that strategy with volume trading. So the way volume trading does is that you have blue triangles, black triangles, and red triangles. Red triangles mean there's virtually no little trading going on at all. So anytime you see a red triangle on the bottom row here, that means just ignore it. The price goes down a lot, who cares? It's just ignore it. And when I do day trading, I just look at the blue candles. But for end of day trading, I use black and blue. I kind of consider them both the same. All right. So if for some strange reason the second to last part of the day is a red triangle, I would ignore that. And so I wouldn't look at that statistics, but I would look at the first triangle volume that was either black or blue. So that's one change I use with the statistics. Second change is some days you are just full of blues. Blue. Now this one's not a really good example because blue, black. So there's quite a bit of blues and blacks. But what I'm talking about is like if you have blue, right? Have a whole bunch of action going on, and what you can do then is sort of, take a vote. So if you have like three blues in a row, and two of the three say, or even if you had three blues and one black, you might say, well, let's just do it. 4-0, that's up. 3-1 up. 1-3 down. 2-3 down. So these two say down. These two say up. So you'd say it's a tie. So you might throw ties. You might choose to ignore the statistics, or you could say that, hey, the last two ones are both say up. Those are the more important. We're gonna go with that. And that's how you could use volume trading with statistics to make it more reliable. Okay. So I want to also with volume trading, I want to teach about just standard stuff. Remind you of standard stuff. Stocks go up, they go down. They go up and down for a reason. It's basically people when people think you're near the top, like it's going up, they're going to sell their shares, and then that makes sense, right? Because they buy low and sell high, and once they sell their shares, the demand's not there anymore, so the price starts going down because there's a lot of shares that aren't. The price is high, and they want to wait for it to go down low to buy again. Okay. Second thing is what people found out they can do is, like, if you buy low and sell high here, the next thing you can do is you expect the price to go down low. So when the price is going down low, you can do a short. You short here. In other words, you sell short here, and it goes down low, and then you have to go buy to cover. So actually, this is weird. Selling high, that's a short, and buying low. So your profit in that case is from here to here. So what I'm saying is, when you see these volume things, you're looking for exiting on a peak. On a peak, you're doing the exit along and entering a short. Now on a valley, you're going to be doing the opposite, exiting a short and entering a long. Here's a peak, so you'd be, it's going up, you'd be exiting a long and entering a short. Okay, so what I'm saying is it's very important to try to find the peaks and the valley, and then to identify if you're at a peak or if at a valley. Then there's a situation where it's just kind of going down and down and down and down. Like this one kind of goes down and goes up, but the next one over here, it's going down and continues to go down and then jumps up. So there's different situations to look at. Sometimes, all right. So now there's three ways to determine there's a couple ways to determine whether you're in a peak or a valley. Well, the easiest way is just to look at this red line, which is sort of like an average. Goes up, it goes back down. Okay, so that's a peak, and then it's going back down. You're in a valley. So it's kind of, and it's starting to go back up. So since it's starting to go back up, you can tell you're coming out of the valley. So that's one way, and another way is you look at the first two rows. First row is long term, and the second row is short term averages. Okay, and so what people do is they use simple moving averages, and where they intersect, that's when the peaks in the valley are. So what I have is two SMAs that are more like long-term averages for the top row, and then two SMAs indicators that are for the where they cross. That's where this one is for more short-term things. And so long-term analysis is where short-term analysis will come into play, and you'll see that more today. So like you see this day 2/3 of the day long term is green, and maybe the last third long term is red, right? And on this day, however, the long term is all red, pretty much all red. It's going down, 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 down. And so a lot of times at the end of the day, people are going to sell because they bought here, or I'm sorry, they're shorting. End of the day, they want to look at all these huge profits, so they want to get their profits before the end of the day. Why? Because the next day, weird things happen usually from end of one day to the next day. There's usually a big volume spike. See these spikes end of the day. So there's lots of incentive to exit out of your trade at the end of a day. So in this case, the price starts down here, and they're buying, and then it's like they're getting out here, and they might want to get out here, right? So, well, what I want to show you that is, talk about momentum now, or let me talk about more about a valley, identifying a valley. So if you look at the short term, the second row from the top, you can see that there's a peak here, and you see these 3 black squares here. That tells you this is where it thinks it's the peak, and then the price starts going down, and the reds go down, and all of a sudden you see another one that says it's a valley. Okay. Now if you look at these blue triangles here, you see these blue triangles here. You go from here to there, and the price goes down. So what's happening is generally people that have shorted here, then they can do a sell short here, and they can do a buy long, buy to cover here. So sell short here and buy to cover there, right? The other thing that can happen is on an uptrend, they can't show it it's off the screen. They would have bought, there might be some blue candles down here, and it would have gone up here. So in this case, if you look, it's red. See this, a red momentum. Now, if the thing's going up, you'd expect green momentums. If it continues to go up and up and up. So this red means that the momentum's going down. In other words, people are selling their stocks like crazy, and you can't just tell that a normal bar chart. But when you see the blue triangle, you can tell people are selling. So it goes, and then you got a red momentum that it's slowed down. So red on an uptrend means that people are exiting out of a long. And now you have a downtrend, right? And you have a red here. And what the red on downtrend means, people are exiting out of a short. So red can mean either exiting a long or exiting short, and it all depends on if you're on a downtrend or an uptrend. So not necessarily if you're at the peak or close to the peak might be a better way to do it. So if you get close to the peak and you see a red, that means you're exiting a long. Or if you're getting close to a valley and you see a red momentum, that means you're exiting short. The same thing can be said for green. If you're at the top of a peak, like over here, so you're at a peak and go down, see green there at the top of a peak means that you're entering a short sell. Whereas down here, if you're at the bottom of a valley and you see all these green momentums, that means the price is going to go up. The momentum's going up. You're in the start at the valley. It's a good price. Lots of shares available, so there's not much demand. The price is low, so it's a good time to buy. So you start buying, and that creates the demand. And all of a sudden, boom, it goes up. So that's the analysis of what's happening. I've told you about statistics, how to do that, so I really won't talk about those anymore. And we'll just go through 10 days worth of examples. So if you want to stop listening now or go through the 10 days worth of examples, you can stay and listen longer. I'll try to talk fast. Identified the valley because of this black. First day, identified the valley because of this black. It's gone black and green. And that's pretty clear cut. And we ignore the last bar of the day, candle of the day, because this is where we make our trade. And so what we see here is all greens, not a red and a green. The red would have been here. All these reds. So these reds are saying that people are like either exiting shorts or exiting. Yeah, they're exiting the shorts or exiting along. So we really don't care a whole lot about those. There should be a green. This right here is basically, and we're in a valley. Green means without doubt that the price is going to go up because we're in a valley and the price is going to go up. And so the next day, sure enough, the price goes up 87 cents, which is about 3% because it's a $27 stock. That's a good deal. Okay, the next one, long-term downtrend, and these days are it's a little bit harder to figure out if you're in a peak or valley because the whole dang day is going down, which would be like, yeah. So, and if you look at this bar here, it goes down, it goes up a little bit, down, up. Does it go up a little bit? So you can draw lines like, I don't know. Sometimes the lines are helpful, sometimes they're not. So I could zoom in a little bit, make it a little bit bigger. Okay, so we're in a downtrend. Downtrend doesn't think we're at a valley because they're all red. Short term is like down, valley, up a little bit, keep on going up, reach a peak, go down a little bit, and you can see it down here. It takes a little divot, comes back up, and oh yeah, this is kind of interesting. This is doink, doink, and then it drops. Boom. That's kind of a little squeeze, or I think they might call it a pedo flag or something like that. Anyways, stay in focus. So it goes up, down. This would be a peak. That's saying that's a peak. And then if you look at it, well, it looks like it's going up. It's kind of going sideways. So this is a hard one to tell where the peaks and valleys are. So I guess if we rely on this thing, it's a valley. So it's like the long day is the long-term one is going down still. So that tells you it's valley. And then these two reds hit the valley bottom and then go back up again. So that's a valley right there. And after that, it start going up. Alright, so now we look at that. We're in a valley, and again, you got greens. Valley with greens means it's going to go up, and the price went up. Now the next day is similar. Right, the long term is red, all the way throughout the whole day. And then, but then the short term is different because it's going down, hits a valley, and it starts going up again. Well, that looks like it's a valley to me, but it's a really long rise. That makes it not quite as clear, you know. But it would say that it's valley's been reached here, and then it's going up towards a peak. So are we considered, by the time we get to the end here, are we considered a peak or not? Now I know it's been going up, but the volume here is red ones, and so it's going up and up and up, but it's been based on red low volume, so it's kind of like ignore that. But anyways, if we look at the red line here, this might be, like I said, this is the third way to like kind of decide on unclear cases. So you can tell that this is the bottom of the valley there, and then it's going up, and that's a peak right there. And if you zoom in, maybe it looks more like you can see more. Here it goes down, reaches a peak, and then hits there, right? So I say that that's probably a peak in my viewpoint. So like if we were to connect the red lines here to there, you can tell that's a peak. And then you again using the red lines here to there, you can tell that's a valley, right? You can see a volume here and a volume there. So this is clearly kind of going like if you connect the blue volumes there, and then it goes up, up. So down, up. That's your peak. It's a flat top peak. Statistics say 1 and 3, so it's down, going down. And so a little bit not really clear cut in my viewpoint. You might want to stay away from this trade, but if you can agree with what I said about identifying this as a peak as opposed to valley, then with that it opens up lots of stuff. This little green right there means that it's shorting, because you're at a peak. A green means short. So the next day the price goes down 61 cents, which is about 2%. But then it goes back up right away. So you have 1, 2, 3 down bars, and then after that goes up. So that's probably what the uncertainty was all about. You know, it's like that's what I was telling you about before. Up here you have the first bar of the day, the largest, and the any. So I think the goal just is to try to get the first bar of the day, because that way you're in and out, and you won't have a big chance of taking a big loss, and you have your OCO order in there. So if it does what way you want it to, you'll make your money, and if it doesn't, you won't. So it's better off trying to get the first bar of the day. That was probably one of the more difficult ones, because we're trying to identify a peak. And a kind of a rule of thumb, well, I don't know what the rule of thumb is. It's like you have a strong, healthy, I guess I'm done analyzing that day. So this day, this one, you have a black one here, which is going up, hits the black one, and goes down. So this is clearly peak. That makes it easy, relatively easy. So that's a peak. You have a red momentum, which means that people are exiting their longs. Exit long, which means it's going to go down. And then the next one, you have a green one, which means that people are starting to short. So it's going to go down. Boom. And it went down 87 cents. So that's like a 3%. A 3% one. Yay! Alright. I'm showing you ones that are a little bit not as clear cut, but because you might not want to trade on them until you get more experienced, or not trade them all, because you're looking at 3 or 4 stocks, you have lots of choices. I got so I could look at like 6 different stocks. So the ones that aren't clear, you'd basically not really you'd throw them out and get the ones that are more clear. So this is one of those I was telling you about that has lots of volume. See, you got blue, blue, black, blue. So 4 ones, 3 of them are blue, and then if you look at 1, 2, 3, 4, 5, 6, 3 of the 6 are blue. So statistics wise, this is, you got 3 and 1, so that's his up, 2 and 3 down, 2 and 3 down. Looks like 2 and 2, 2 and 2, and 0 and 3. So 3 say down, 2 say neutral, and 1 say up. So the downs have it, and the price went down. So that's how when you combine volume trading with statistics trading, that's the type of thing you can do. in this situation. Okay, so if you look at the long term, it's half the time it's going down. Long-term downtrend, and then here's reached a peak, and here then it's gone down. So when it reached a peak here, basically what it's saying is that like people might be buying down here and selling up here, and now they're doing a short and coming down here. But what I want to show you is that another advantage of this volume trading, there's no blue. See, it's like red, red, black, red, black, red, red, black, red, 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 black. So there's more reds from here to here than blacks, and there's not any blue. The first blue we see at the beginning is right there, right? And then you got these other bars at the end at the same price level. See, they're all in a row. So in reality, that is a big old resistance line. And this peak up here is a false peak. Remember I said ignore the red ones? This is a false peak. And then if you look at momentums, they're all black. So that's a really good clue to tell you this isn't a real peak, okay? This is more like, this is a support line. So if you know about support lines, the price comes up, hits a support line, and bounces down off of it. That's what a support, I told you it was a support line. This is a big old resistance line. So it comes up, hits it, here's a little bit of falseness, and then it comes down a little bit, hits it again, and see all these volumes, boom, boom, boom. Maybe you can't see it because I got activate drawing, got it too high. I'll put it a little bit above it. It hits it, hits it, hits it, and goes down. It's not able to break through it. 1, 2, 3, 4 volumes in a row. So they always say it hits resistance line, it's gonna go down. That's because if you are a buyer or a seller, you're a trader, and you want it, and you're hoping to like buy low and sell high, and it's like boom, it doesn't make a boom, it doesn't make a boom, and you're like, oh crap, it's not gonna make it, I better get out of there. And so then you panic, and maybe not panic's the right word, but maybe you're being smart and getting out of it, and boom, it goes down low. So that's the resistance thing. This is why when you have all this volume in a row, red or blue volume, blue, black, black, at the end of the day, things are going to change. So I have many blue volumes. There's going to be a trend change. So there's situations where you have like blue, black, blue. That's a lot, but this one is really good. It's like blue, black, blue. So 3 of the 4 are blue. So that's definitely a many blue, multi-blue, whatever you call it. It's going to be a trend change. So you can see the trend is going up, that this is a false peak. So that's not, if this wasn't a false peak, if you had a bunch of blues up here, then you could make an argument that this is actually a downtrend from here to here. But since this is sort of like a false peak because there's no volume going on here, then you really have a long upturn trend, have all this stuff here, lot of volume that indicates a trend change. Remember I was saying if you had an uptrend, this is a good time to do an exit, a long, and enter a short at the peak. So this is a peak. All this is, what I'm telling you, is determined that this here is actual peak. And that the price is going to drop. And it dropped the first bar a lot. It dropped by 72 cents, so that's almost 3%, 2.5 cents. 2.5%. I'm sorry. Yeah, 2.5% in one day trade. So it's really cool. We didn't even look at this whole thing here, right? The momentum line, it's all black except for one green and one red. Okay, so we have an uptrend, and it's green. Here, what does that green mean? People, and the green near the peak, and it's going to go down. Red near the peak. I'm sorry, green near the peak, it goes down because they're shorting. Red near the peak, it's going to go down because they're exiting their long. They bought down here, and the time it gets up here to this red, they're exiting, they're selling it, and so that means the price is going to go down too. So this is really good stuff. If you look at the peak information here, we said that this is a peak, no doubt. The peak shows up here, which is the second to the last part of the day. So that's kind of a legitimate peak. And then I'm so sorry, I lied to you again. If it's red, like it's going down, going down, going down, going down, and then you hit this tells you it's the valley. So I guess what I'm saying is when you look at the second row here, the short term can be a little bit deceiving because for the examples I just gave. So I guess what I'm saying is analysis is a little bit tricky, and this was another one of those a little bit tricky, a little bit analysis, but it makes sense when you think about it. This one looks like it might be an easy one. I hope so. We're due for an easy one. Okay. So it's going up, hit the peak, going down, hit the valley. Valley is close to the end of the day. When you got a little black line here right before the end of the day, that's good. When you get a black line, a little black dot towards right at the end of the day, that's a little bit right at the end. That's not so good. Anyways, there's this one here. It's a valley. Now, the other thing to look at is it's a long-term trend line is going down, so it makes sense it's a valley. And I guess if you go back over here too, see this green? It's a long-term up. That means it's a long-term up, so that by the time you get to end of day, it's like a peak. So that's a good rule. I just realized that. Let's see if that's true for everything. End of the day here is trading, so it was changing. That might not be a good example, but you can see it's been going down and then it's changed. That'd be a valley, and then there's a peak. I'm gonna stop that. Chasing a rabbit. Okay, so it's going down, it's going down, it's going down. So we're probably a valley, long term, short term, going down, hitting the black, which is the bottom of the valley, and then it's going back up again. So that's the valley. We're at a valley. Now, if you look at the volume, it's going blue, black, blue, black, blue, blue. So we got 1, 2, 3, 4, 5, 6 candles, and 4 of the 6 are blue. So this is another one of those high volume things. But it's pretty easy to analyze. Okay, so high volume means there's going to be a change. So since it's been going down, the change is up. So that's one way to vote for up, because high volume and then a change for up. The second way to tell is that you look at, it's like a red. Okay, so the first one's red. What's the red about? We're in a long-term downtrend, and you see a red. That tells you that they're exiting the short. So that exiting the short in a valley, so that means the price is going to go up. And then the next see is 3 green ones. That means if you're in the valley, you're entering a long. So the momentum's going up. So that means it's going up. So that's going up. So this was pretty easy. Everything says move up. And of course the statistics say it's going to go up too. At least the second last part of the day says it's 2-1. And then the next one before that says it's 2-2. So if you just look at the last two, the last one says it's up. Yeah, and if you look at the pattern, you can kind of see that 0-4 down, 0-4 down, 1-2, still down, but getting closer to like a tie. Then you finally got a tie 2-2. Then a 2-1 means it's starting to go up. So statistics show that it's going. The momentum is changing from going down to going up. Next one. Okay, yeah. So we got on the row here. The long-term row changed. right towards the end, and then the short-term average trend changed again. It was going up, hit the peak, and right before the end, and gone red. So pretty clear that this is a peak. If we draw our lines in here, see the red line like this, and we connect the peaks, peak, peak, and then connect the valleys, valley, bottom, and draw our lines. You can tell that right in here, see these blue lines here, here and here, that we're at the peak. And this one here, we're close to the peak as well. You can tell that. I can zoom in more to make it more clear if you want. Makes it a little bit more clear, but so bottom line is we're at the peak. And if you look here, we got 4 reds and a green. Okay, so we're at a peak, and remember, if you're at a peak and you see red momentums, people have basically are exiting along, so the price will go down. And then if you see a green and you're at a peak, you're going to do a short, so the price will go down. So what happens? The next 2 candles, down and down, occurred. The next candle, of course, is the last part of the day, which we'd be making the trade on. And then this first candle, first day, goes down. So this is 45 cents. That's about a 2% change. And anyways, so that's that day. Okay. All right. So you can see the long-term trend line is going up, and then on the top row, long-term trend says pretty much green the whole way. So time we get to the end of the day, you would expect we'd be at a peak. At least as far as the long-term view is going. Now, if you look at the short term, it goes from green to a black to a red, and this little black is pretty close to the end of the day, and so that says we're at a peak. Now, but that's the peak at this point, and still a little bit far from over here. So I'm saying that this isn't the clearest cut thing in the world. So let's look at this thing here, the red curve. It goes down. Okay, starts here, goes up, down, right? So you can tell that there is a peak here, but if we were to draw a line connecting the averages, anyways, I hope you can kind of see that the red line up and down shows that we're sort of in a valley there. So I believe the red line, since it's not totally clear, and over here it's kind of it's borderline of being a long run. You notice here you got of the green candles going up from valley to peak. You got 1, 2, 3, 4, 5, and over here you got 1, 2, 3, 4, 5 to the end there. So if this here isn't the bottom of the valley, you're getting close to it, and this kind of confirms what I was saying. These statistics say it's going down. It did go down, and so if we're in a valley, right, and we look at the momentum, red, 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 red. So we're not getting the green red thing, we're just getting red, 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 red. Red, 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 red is a lot different than red and green, or green and red. So what's going on? We look at this little peak here. Is it legitimate? Well, we got two blue volumes here, so it's legitimate. Unlike the other one that we didn't have those. So let me escape. This is sort of, if you connect the blues here, it's a slowly sloping curve up. It is going up though. It's not quite a resistance line, but sort of resistance line. And then you have that pedo flag thing coming up here, zoom, and you got this little flag head, which if you're going to rise, it's sometimes where the two come together and meet at a point, that indicates it going down. So that's a little bit of analysis with the pedo flag thing. But going back to these red. So if we start here with the first green, so we can get the green-red interface, right? The green. So if you look at the first green, that's this one here, and there's the blue volume, and the price goes up. That tells you that this green was a buy. People bought it, and the price went up, right? But then the next one's a red, and after the red, the price went down. So a red and the price goes down, meaning people sold. Let me zoom in a little bit more. So you got red momentum with high volume, and the price after that went down. So that's the peak, and red on the peak means that people are exiting along, and the prices go down. So here they're exiting along, and that's what that red means. And now we come across and have another red. So we got two reds in a row. So what they're doing is they're still exiting along. Why can they exit along? Because people have been buying here and buying here and buying here, right? And so they've done the second exit. Here they're exiting along, and now we're coming along and we see another red. So they're still exiting, and now we come along and we see another red. They're still exiting. So people are exiting like crazy, and we haven't gotten to the bottom of it yet. We haven't got to the red-green yet. All we have is red. So that is why the volume predicts it going down. Alright, so the next day, you can see it's a long-term uptrend. This could be a valley down here. If you look at connecting the green lines, right, you can tell that that's obviously a valley. That's a big valley. And so with momentum, so we got green, four greens. We're in the valley. Obviously it's an uptrend. Price will continue to go up, and it does. And the statistics say it's going up. So that's the end of the video. Hope you enjoyed it. It'll at least help me to remember what's going on.